Hi guys, my name is Arman and I've made over 500k trading prop firms the last 2 years at the age of 22 years old. And today I want to talk about the main reasons why people in the US struggle to pass prop firm evaluations. I would go as far as saying 90% of people in the US are actually struggling on a daily basis to pass prop firm evaluations in compared to people from other countries such as the UK. What I've realized is American traders face different challenges, and one of those challenges is the regulation in the US are way stricter. What that means is a lot of prop firms don't even operate in the US when it comes to CFDs, and that's purely due to regulations. There's nothing that you can do much about that, but what you can do is you can shift the way you think and you can actually position yourself in a better position so that you can make the most out of what you have been given. And when it comes to US regulated brokers, the leverage is extremely restricted, and it's restricted to 1 to 50 or even lower for many brokers in the USA. What that really means is that you can't really grow a small account to a really big account with a low leverage, and that's actually a disadvantage when it comes to trading as a beginner, because you don't start with a lot of money, so you have a small amount of money and you want to grow into a large portion. And with low leverage, you can't really risk a lot of your account per trade, even though you might be a profitable trader and have a data-backed system. Most Americans come from a stocks background, and that stocks background doesn't really correlate really well when it comes to forex trading and especially prop firm CFD trading. Actually, a lot of American traders do actually tend to trade futures firms, but then that is again a completely different ballgame to CFD prop firms. Prop firms heavily punish the high-risk mindset, and this is a very cultural thing in the US where traders come with a high-risk, high-reward mindset. One of the key reasons US traders are failing prop firm evaluations is because they're trading way too many instruments. The way I've always thought about instruments in my last 2 years that actually helped me make $500,000 in payouts from prop firms is that each instrument, it's its own individual business. So what you want to do is you want to pick one instrument, go all into that instrument, study it, see the patterns, backtest data, collect data, then forward test it, live test it, and now you have a strategy that's profitable, is based on data, and you can actually trade that instrument. But because that data has been collected for that specific instrument, what that means is you can't really now take that strategy, apply it to other instruments and expect the same results, because that will just not work. That's a very redundant way of thinking. But again, in US, a lot of traders think like that they need to be waking up in the morning and then to scan 20 different markets. They even use these screeners that are looking at 50 different markets and they're giving them best pairs to trade. But that is just completely wrong. That's not how a profitable trader thinks about instruments. US trading culture normalizes risking 5 to 10% per trade. There is a lot of all these fake gurus that are just brainwashing everyone in the US that, oh, you can take $10 to $1 million. That is not possible, guys. You should not be listening to these fake traders online, and you need to just rewire your mind that real trading, it's as close as it's gonna be to banks and firms like hedge funds, where they're risking very small percentage per trade. Because at the end of the day, your goal is not necessarily capital growth, it's capital preservation. If your strategy is reliable and profitable, your capital will grow. But if your strategy is not profitable, your capital is now gonna plummet to zero slowly. That's why capital preservation is the key. You need to make sure that you're not losing a lot of money, and how you do that is by having very little risk per trade. I would recommend 1 to 2% risk per trade on a personal account, and when it comes to prop firms, you should be risking in evaluation up to 2% per trade, and then once you're funded, I would say even less than 1%, 0.5% to 0.75%, depending on the quality of your setup. Is it an A+ setup? Then sure, now you can risk maybe 0.75, 0.8% per trade. If the setup is a low probability chance that's going to win, then you should probably risk 0.5 or even less. Most prop firms restrict high impact news such as NFP, CPI and FOMC. American traders are used to trading these events because there is so much volume and volatility in the markets during these times of day that's when it makes the most sense to be entering your trades, because now there's a high probability that you're actually going to end up hitting your take profit or catching the big move for the day because there is volume in the markets. But when it comes to prop firms, trading high impact news equals instant breach. What you need to make sure is that you don't trade these high impact news. The ROI on trading a high impact news is close to zero when it comes to prop firms. There's also a statistic available online that prop firms have released in the past that most breached accounts happen because of news. And most traders that get eventually restricted by prop firms or banned, it's also due to them trading news. Another reason US traders keep failing their prop firm challenges is because of over leveraging. US brokers cap leverage at 1 to 50, but prop firms are giving you 1 to 100. Most traders are gonna see this as an opportunity, but in reality, more leverage with the same risk mindset is gonna equal into a blown funded account or an evaluation. So what you need to do is you need to make sure that you check the leverage and you use the same risk that you would have used on your personal account with 1 to 50 leverage and stay consistent. A lot of US traders are also not aware of the consistency rule. And the thing with the consistency rule is they might be familiar to it because of futures firms, but in reality, most of the times the consistency rule with CFD firms is a hidden rule, so you don't even get told there's a consistency. The only thing you'll be told is, oh, you have to trade 3 minimum trading days. So what you can do is, what a lot of people do, they had their evaluation target in like 1 day or 2 days, and then the last day they will enter a 0.01 lot trade just to make up for the minimum trading days. But in reality, there is a rule that in the back end, most prop firms take very, very seriously. And that rule is this person showing gambling tendencies when they're trading? Are they hitting their target for the evaluation in a single day? Because realistically, if you're risking 1% per trade, you're not hitting your target in a single day. That's gonna be a swing trade for the day. If you do end up hitting it, you're gonna fail a lot of evaluations before you hit the target, which again gets flagged in the prop firm's back end that this guy is showing gambling behavior, that he's bought multiple evaluations, then he's passed one of them with one single trade. That just sounds like you're cycling between evaluations until one of them you pass, and then you're gonna do the same with payouts, and that is just not allowed by prop firms. So make sure you don't do anything like that, and you actually have a mechanical system that you follow every single day, and you actually trade based on that system. When it comes to stock trading, sure, you can probably lose your whole investment into stocks, your whole trade can get liquidated, but when it comes to prop firms, if you have 5% risk on the line, that's most likely the daily drawdown for most prop firms on a two-step account. So now, if you're losing 5%, that's gonna breach your account right away and you're gonna lose your evaluation fee. I recommend every single person that wants to start trading with CFD prop firms to join the Discord server for all of these prop firms. Follow them on X and make sure you go to their website FAQ section and you read through all of it. And I know out of every single person that's watching this, probably one person is actually gonna go to the Discord server, read through it, talk to moderators, talk to people, ask all their questions and get them answered, then go to the FAQ on the website and actually read it. That's gonna take you probably 2 hours, but let's be honest. Are you here to have trading as a little joke and play around and lose money and then move on like most people do? Or are you here to actually make money long term, have a proper business that's gonna get you freedom in life, that's actually gonna take you somewhere, a business that's gonna provide for your family, take care of your parents, take care of your siblings? Or are you just gonna be a loser and just take the other side and be a clown because you can't spend 2 hours reading the FAQ on the website and then you expect to be a successful trader? Just keep that in mind. The prop firm game can be solved and it can be won. All you need to do is play by the rules and actually understand what the game is from day one. Don't waste your time. Play the game to its fullest. The rules are strict, but they exist to remove gamblers and to actually reward consistent traders. That's why consistency in trading is so key. You don't want to be full porting accounts. You want to consistently build profits over a long enough time. Comment below if you're a US trader and what your biggest struggles have been with evaluations so far. I will read every single one of your comments and reply personally with the best possible advice I can give from my years of experience trading prop firms.